How do you make your first real estate investment when you don't have any money? I hear this all the time from people who are really interested in learning about real estate investing, but feel like you just can't get started because they do want to have enough capital, or they do want to have a lot of money saved up for a down payment. Because you might say, well, what if the tenants damage my property, or what if I have bad tenants? Well, the good news is, if you do it the right way, this really shouldn't be much of an issue. Think of REITs as shares of stock that you can buy into publicly traded companies that own real estate. An FHA loan is a mortgage that is backed by the Federal Housing Authority. It allows you to put as little as 3.5 down, and it has more lenient credit score requirements than conventional loans. So if you're just getting started, and you're having a little trouble qualifying for a conventional loan, an FHA loan might be the perfect option for you. There are some downsides to an FHA loan. For example, you'll have to pay mortgage insurance premiums for the life of the loan. Let's say that you want to buy a property in Cleveland. And Cleveland is a very affordable city with a low cost of living. It also has a strong job market and a growing population. Many young professionals and families are moving to the city because it offers a more affordable lifestyle than other major cities in the Midwest. According to the U.S. Census Bureau, Cleveland is one of the fastest growing cities in the country. And a recent study by the Brookings Institution ranked Cleveland as one of the top 10 cities for millennials. You might find a neighborhood that looks a little rough, but you believe that this neighborhood is close to downtown, has good schools, and is close to public transportation. You might also see that the homes in the area are selling for below market value. Decide to buy one of these homes, fix it up, and rent it out. Over time, the neighborhood starts to improve, and the value of your property goes up. And also, you'll need to find a property that is located in a federally approved area. REITs own all kinds of real estate, everything from shopping centers to office buildings to apartments and even data centers. Basically, you're betting that the area that you buy into is going to become more valuable over time. You might find a neighborhood that looks a little run down, but you believe that this neighborhood is close to downtown, has good schools, and is close to public transportation. You might also see that the homes in the area are selling for below market value. You decide to buy one of these homes, fix it up, and rent it out. Over time, the neighborhood starts to improve and the value of your property goes up. Now, it's important to note that this strategy can be controversial because sometimes gentrification can cause the displacement of longtime residents who can no longer afford to live in the area. However, if you're simply looking to make an investment in real estate, this strategy can be a good one to follow. When you buy shares of a REIT, you become part owner of those assets. REITs must pay out at least 90% of their taxable income to shareholders, which means that you can receive monthly dividends from owning a REIT. You might say, well, who wants to live in Detroit? Well, a lot of people, actually. Detroit is a very affordable city with a low cost of living. It also has a strong job market and a growing population. Many young professionals and families are moving to the city because it offers a more affordable lifestyle than other major cities in the Midwest. According to the U.S. Census Bureau, Detroit is one of the fastest growing cities in the country. In a recent study by the Brookings Institution ranked Detroit as one of the top 10 cities for millennials. REITs are traded on major stock markets like the New York Stock Exchange and NASDAQ. You can trade REITs through any brokerage firm. Some popular REITs include Realty Income Corporation, Kimco Realty Corporation, and American Tower Corporation. These REITs offer monthly dividends, and they have a pretty good track record of increasing their dividend payouts over time. A company called Invitation Homes is the largest owner of single-family homes in the country, with over 80,000 properties. Invitation Homes is a REIT, and they are traded under the ticker symbol INVH. So if you wanted to invest in single-family homes, you could simply buy shares of this REIT. If you're looking to purchase a property to live in, I recommend that you buy a property that is located in an area where there are other properties just like yours that look the same and have been rented out for many years. These types of properties are usually older and more affordable. They're going to be things like duplexes, triplexes, or quadplexes. Most of these type of properties are be bought by individual landlords, who have done this successfully over and over again. So there is a track record proving that these type of properties can be rented out. Also, most of these type of properties are be sold by other individual landlords, which means you can save a lot of money on buying the property because you've be able to negotiate the price lower because the sellers are usually be individual landlords and they want to sell the property quickly and move on to their next deal. This means you will be able to avoid paying an agent commission, which can easily be several $1,000s. And if you do it the right way, you'll be able to finance 100% of these properties with no money down. You can literally start this process with $0 in your bank account and still get started. They might even be living paycheck to paycheck right now and not sure where to start. What if I told you that it is possible to get started in real estate with less than $1,000? And that is exactly what we are going to talk about today. How you can get started in real estate investing with very little money. I'm going to go through a few different options that you can use to get started. The first way to get started in real estate with very little money is to move into a property yourself and rent out the other rooms to other people. If you want to live in an apartment instead of renting an apartment, buy a multifamily property and then rent out the other rooms to other people, and then the tenants will pay the mortgage. Now, this is called house hacking. By doing this, you can move into a property and live there for free while also building equity at the same time. You basically have someone else paying off your mortgage for you while you reliving in the property and collecting rent from the other units. Now, I know some of you might be thinking that this isn't a good idea here as an example. Next one is REITs. Now, REIT stands for Real Estate Investment Trust. Another way to get started with very little money is to use an FHA loan to buy a property. Another strategy to get started in real estate with little money is to buy a home in an up-and-coming area. Now, this is called gentrification. So let me give you an example. Let's say that you want to buy a property in Detroit. Now, I know what some of you are thinking, so let me give you another example. Now, I know what some of you are thinking. You might say, well, who wants to live in Cleveland? Well, a lot of people, actually. And if you want to learn about 4 different ways to make passive income online, check out this video over here. Thank you so much for watching.